India's market news headquarters. Cutting-edge analysis. Influential insights. Market-moving intelligence. Broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
One of the best-known musicians out of India in a generation, over a generation, Zakir Hussain, no more, left us after health complications in the US. The family has now confirmed to CNBC-TV18 that he has indeed passed. Really sad news coming in. Of course, there were reports and all kinds of things from last night, but I think this morning officially the family has now confirmed that he is no more. So that is the news which is coming in, and I think we're starting on a very somber note. Really one of the legends, living legends, as far as not just the tabla, but actually, all musical instruments, collaborations with musicians around the world, and someone who really took Indian classical music to the world in more ways than one. So just an amazing musician of our times. I had personally the privilege of watching him here in Mumbai, not very long back, and he was performing, just electrifying. If you guys have seen him play live or, of course, otherwise as well. Nigel, Reema, morning.
Hi. I remember that Bar Taj ad, right, of, Zakir Hussain. It's an irreparable void that he's left in, in the industry and everyone, right, who's grown up listening to him.
Well, that's right. And he gave soul to the tabla. He took India to, classical music to the globe as well, and will be missed. Condolences to the family and to the entire fraternity. It's a big, big loss towards the end of 2024.
And young as well, right?
Yes.
73.
Yes.
73. So, that's the somber news, as I said, that we are sort of starting the day with. Now, more on that later, but we got the market to sort of talk about, address, and so let's start there and tell you what you need to know. Remember, the market here this Monday morning is coming after a manic Friday. Friday was, just quite something. We had a big sell-off and then a big recovery as well. But let's just start with, from the first point that you need to know. The big talking point this week is the 25 basis point cut, which is priced in by markets as far as the FOMC is concerned. It's almost fully priced in. The decision will be out on Wednesday. The market here, as always, will react to Asia, will react to it on Thursday morning. That's point number one. It's all largely, as I said, in the price, but the change can come as far as projections, Fed projections are concerned, as far as the economic growth, inflation, unemployment rate, etc. is concerned. And there is scope for significant changes to those projections. Guess what's happened to the 10-year yield? It went up 24 basis points last week. The last Friday's change was 7 basis points, and Friday to Friday, we've seen a 24 basis point move. It's the biggest weekly rise since October of 2023. So what's happening, of course, is that the dovish Fed is hurting bonds. But at the same time, at some point in time, we don't know when. It doesn't matter till it starts to matter. Yields get to a point where they start to actually hurt stocks as well. We're not probably there yet, but we'll have to watch this very, very carefully. Remember, US 10-year real yields are already above that sort of, traditionally what is seen as a danger zone, 2% levels. We're already above that at this point in time. At the same time, equity markets are doing very well. The S&P on Friday was unchanged. NASDAQ was higher. The Russell was slightly lower. But the implied volatility in the S&P is nearly at 2024 lows. Stock markets are cruising along nicely, but at the same time, yields are also moving up as well. The other factor, of course, is the dollar. We got a one-week reprieve for the dollar. We fell from almost 107 levels to 106, and we're back at almost about 107 odd levels or so, just under it as far as that is concerned. Now, just to sort of tie up the levels here, the Nifty bank fell to their respective 20-day moving averages and then saw very strong buying. which completely reversed and then added a lot more to a Friday session. And it was a classic case. I mean, actually, if you just look at the daily charts, almost exactly a touch at the 20-day. And then from there, a significant bounce is what we really saw. And I think that's the reason why I think maybe there is more here, at least on the upside. There is seasonality, etc. as well. And you don't want to stand in the way of strong sort of seasonality, which is essentially positive for this time of the year for equity markets around the world. So can we build on what we saw? I mean, the sell-off did not last, but the bounce was significant. So the levels then come into focus. The support first, it comes in around the 24,400 levels on the downside. But more importantly, on the upside, I mean, we need to take out 24,770 and 24,850 levels. So that's a zone to take out. And then we should eventually head, and it's not very far away, to 25,125 levels, which is nothing but the 61.8% retracement of the entire fall from the all-time highs to the recent lows. Nifty Bank, same thing. We held the key averages, which is the 20-day moving average, and then we saw a very sharp bounce back. Immediate resistance for the Nifty Bank stands at 53,888 to 54,467. This is the zone that the Nifty Bank needs to head to. And the near-term support basically comes in at about 53,350. I would say the skew should be positive as we start this week for a number of reasons that I already outlined. The GIFT Nifty will come up on your screen. It should give you an indication of how we're likely to start. Okay, that's interesting. We're around 50, but that does give you a sort of, it does give you an optionality. You're not starting 50 higher, 100 points higher, and then you're left chasing. At some point, you maybe start to get a bit of a buy on dips kind of price action. Nigel.
Well, that's right. You know, it appears that the markets have gone back into that buy on dips mode, and it appears that it wants to test higher levels as well. In Friday's trading session, it was a classical case, right? We went down to around the 20 DMA. We conquered that. In fact, then we took out the 50 DMA as well. So the Nifty, the lows on Friday, it coincides with the 20 as well as the 50 DMA. And we managed to close above both those levels on a closing basis. What's heartening to see is the flows. The FIs are back and they're showing us the money now. After 2 consecutive months of selling, the flows so far have been quite good. It'll be a little higher than this because even in Friday's trading session, they pumped in close to around 2,000 crores. So the FI flows have turned around. A few factors have played out. The state elections have gone in favor. You have a couple of large trades as well that's taken place. And the MSCI rebal as well. That's something that could have played out. And we know that the domestic flows have been good. So the SIP contribution, well, that continues at around 25,000 crores odd. So liquidity has turned positive, both from the FIs as well as the domestic funds, which is good news for the markets. What happened on Friday? Well, the cash market buying was there from the FIs. And if you look at the future space, well, there was a bit of short covering that played out both on the Nifty as well as in the Nifty Bank. And that perfectly ties in what the FIs did. So they covered some short positions, they added some long positions. Overall, they continue to remain net short with close to around 59% of their positions on the short side. But in fact, we did see a bit of a short covering bounce that did play out, which aided that up move. So in terms of levels, the downside, I've been mentioning this level of from 24,400. That's important. Friday the 13th didn't really play out for the bears because we did see a good bounce of those levels. So going by the options data, you had a couple of strikes that were active. 24,400 is important on the downside. And going by the options data itself, since the 24,800 call has been fairly active, that level of around 24,950 to around 25,000, that will become a bit of a resistance mark in the near term. It's a stock-specific market, so I'm looking at 3 stocks out here. One is Page Industries. The stock moved higher in Friday's trading session, and it's bounced nicely. In the month of November, it went to those highs, and then, in fact, it corrected a little bit. But that dip has got bought into, and this move came on very, very high volumes. Just a note on Page Industries, though the stock is moving very, very well, it's still 10% away from the highs that we saw in October 2022. So keep an eye out on that one. The move came on high volumes. There could be some shorts in the system as well. So Page Industries is one. The other one is KPR Mills. That stock made a fresh 52-week high. You like to be with stocks that are making fresh highs. And there was a good amount of delivery-based buying. So I'll keep an eye out on that one. And finally, some of these stocks, there is that restricted sale of shares since they recently listed. Well, the one that I'm looking at is Travenues Tech. That one, in fact, you'll have a large proportion of the book that was locked in, or a large part of the shareholding that was locked in, that becomes eligible for sale. And since it's a rather large sum, I'll keep an eye out on this one as well. So 3 stocks, Page, KPR Mills, as well as Travenues Tech.
Okay, thank you very much for that. By the way, data's coming out of China where the November retail sales have missed street expectations. They've gone up by 3%. lower than expectations of 4.6% and much lower than the October number of 5.8%. Shanghai is the one we're talking about, where the economic data continues to remain very disappointing. Even last week, the Chinese markets were under pressure for the entire week, as that big stimulus bazooka is still not coming. And now experts are pointing out that the next trigger in terms of potential stimulus perhaps will come only in March when the NPC meets again. That's the picture across Asia. Hang Seng right now is just flat with a negative bias. Taiwan is the one which is up nearly about 0.8%. Let's get to the equity views then. Chetan Seth of Nomura says Asia ex-Japan equities, they've got a cautious stance going into 2025 and H1 of 2025 given the looming headwinds from US trade and policy uncertainty. Monetary policies that are now less supportive than hitherto, with likely fewer Fed rate cuts ahead. A stronger US dollar and China's restraint on fiscal stimulus, he says, these are the risks that will present a ceiling for Asia ex-Japan stock in the early part of 2025. He adds, the main focus of the markets this week will be the December FOMC meet, where the markets widely expect a 25 basis points rate cut. And thus, they think the dot plot will be a particular focus for the markets.
All right. So that's some interesting opinion. Let's get some more. Rajiv Agarwal is now joining us. He's managing partner and fund manager at Doordarshan India Fund. Rajiv, good morning. Good to have you with us here on CNBC as always. So what's top of mind this time of the year, except thinking about holidays and going away and end of the year and thinking about the new one? It's been an incredible year, right? At almost 30% for US stocks, and even Europe, I was looking. It was looking like it's gone to the dogs, but the DAX this year now is up 22%, which is not bad. So it's quietly in a stealth way come up very nicely. And of course, here in India, we've had a good year once again. So your thoughts, Rajiv?
Yeah, I think the overall markets have done very well across the world, Prashant. And I think we are seeing that across various indices that you referred to. I think top of mind clearly is the FOMC meeting that is coming up this week. And in fact, there are a lot of other meetings across various central banks in the coming week. Clearly, FOMC, I think the verdict from most of the analysts is out there that the Fed will cut rate by 25 basis points. But really, it becomes much more interesting as we get into January and how Donald Trump policy measures start playing out for the economy and how the Fed will react subsequent to that. I think that will be much more interesting. On the India front, I can talk about the India front, but I will see if you have any specific question here.
Okay, so what's the outlook for India? We were just listening to the Nomura view from Chetan Seth, and he's talking about headwinds for generally Asia ex-Japan, at least in the first half of the year, due to policy uncertainty, fiscal restraint by China, the fact that the monetary policy may not be as loose as what was previously expected a few months back. And then you've got a stronger dollar to contend with. Would you concur broadly for the emerging markets and including markets like India, the first half of the year could be headwinded?
I think first half of the year next year will be challenging more in terms of how US policy measures will impact these economies. The one thing that we have already started seeing is the US dollar being very strong because the flows have come out of the emerging markets and moved to US. I mean, in fact, last week, 39 out of the 41 countries, there was an outflow from those countries, and it was primarily going into US. So I think there is a possibility that as Trump measures comes in, there will be possibly the movement of flow from these emerging markets and developed markets into the US. But as that settles down, I think it will be much more stock specific and market specific is what we're expecting.
Hi, Rajiv. Good morning and good to see you. Ben, you've generally liked the banking as well as NBFC space. You mentioned a few, some of those housing finance companies, the gold finance company, Manappuram, which has bounced back. Are you a little bit worried about the commentary that we're getting with regard to asset quality, with regard to the offtake that we've seen that has slowed down a little bit? That's the loan growth. And of late, what have you added? Manappuram saw a sharp correction, but you've been quite positive on that, and it's bounced back very, very well.
Yeah, sure. So I think we actually continue to be bullish on the banking and finance space. We think that is a space which has from a valuation perspective, there's still a lot of value out there because the prices in our mind have actually corrected much more than what the inherent value of those companies are. Speaking specifically about Manappuram, and we own that particular stock, we think that Manappuram has done well in terms of the stock price. But right now, the big concern that is there for that particular stock is when do they come out of the regulatory constraint they have been put on, which is the Ashirwad subsidiary. I think the gold loans are doing well. And they also have the other secured book, which is growing well, which is a housing finance as well as a vehicle finance. So I think the secured portion of their book is growing very well, but it is much more of an issue on the MFI side. And then coming to the MFI side, I think we have definitely seen quite a bit of asset quality issues on the MFI and the unsecured book, be it the credit card, the personal loan, and the MFI. And I do think those are the areas that we need to be watchful for. My expectation is that the economy, which we had a little bit of a surprise in Q2, will start performing. And as that performs and as the agriculture and the crop output is good, some of the issues that we are seeing gradually gets settled over the next few quarters.
Okay, well, Rajiv, thank you very much for joining us. It's a pleasure having you here and hearing your thoughts as always. Appreciate it. Well, that's Rajiv from Doordarshi India Fund with this perspective. Let's quickly tell you what's lined up here as far as interactions are concerned. At 8:35, we'll be joined by the management of Astra Microwave. We'll talk about the Cabinet Committee of Security, which has approved 2 orders worth 21,000 odd crores. 9 a.m., we'll have Balaji Subramaniam of IIFL Securities. Telecom is in focus. 9:20, you'll hear from the UBS team, Gautam Chachoria and Tanvi Gupta Jain will be with us. And 9:35, Cholamandalam Investment Finance, one of the top NBFCs, on their outlook for the H2. Samhi Hotels and Nikhil Sharma of Radisson's will be joining us at 9:50 to talk about what else but the trends in the hospitality space. And of course, at 10:15, you've got Indianomics with Lata, and we've got the management of Quest Corp, Azim Premji University, and the Center for Development Studies who are joining Lata for that discussion.
Into a short break. On the other side, we'll focus on the top 10 stocks that we're tracking for you. For the time being, we run you through the list. We're looking at Dixon, JK Paper, Oro Pharma, Sudarshan Chemicals, HBL Power Systems, Godrej Agrovet, Afcons, Aeroflex Industries, and Borosil Renewables. All of them will be reacting to positive news flow, while we have Seagull India that will be reacting to negative news flow. Slip into that break, come back, get into further detail on all of these names.
Welcome back. You're watching Bazaar Morning Call. Friday, we had this tremendous intraday rally. The Nifty recovered 600 points from the day's close up in the green, and it helped us log our 4th weekly gain. The last week, the gains were not much because it was only a Friday up move, but 4th consecutive weekly gain, and this has happened for the first time since July. This morning, the GIFT Nifty is suggesting a slightly weaker start, 56 points lower at the open. But it's time now to talk about the stocks that you need to keep on your radar this morning. It's time for CNBC-TV18's list of top stocks for the day. And first up, it's Upasna on Dixon Tech and JK Paper. Upasna.
Good morning. First up, let me start with Dixon Tech. Now, Dixon and Vivo India has entered into a binding term sheet for a proposed joint venture to undertake OEM business of electronic devices, including smartphones, is what the company has said. Now, Dixon will hold 51% of the share capital, while Vivo India will hold around 49% in the proposed joint venture entity. Now, this facility will undertake part of Vivo's OEM orders of smartphones in India and will also engage in OEM business of various other electronic products as well. Now, moving forward to JK Papers, the company has announced a scheme of arrangement to consolidate its business operations. As a part of the scheme, the 3 subsidiaries of the company, that is Horizon Pack, Securi Packs Packaging and JKPL Utility Packaging Solution, will be merged into JK Paper to create a consolidated paper and packaging company. Now, separately, the board has also approved acquisition of 60% of the stake in Radhesham Wellpack, and it has said that the balance 40% will be acquired within a period of 2 years. Now, Radhesham Wellpack is engaged in the business of manufacturing of corrugated boxes, sheets and other packaging related work products. Hence, even this stock will remain in focus today.
Thanks a lot for that, Upasana. Let's hop across to Vinny here. She's here to tell us about some more stocks and news. Hi, Vinny. Morning.
Good morning. So focusing first with one of the pharma companies, where Aurobindo Pharma, we're expecting some bit of a green move here because they've actually, it's one of its arm. Curatech has gotten a European body's nod for one of its biosimilar drugs. Now, this is a positive opinion that they've received over there. Why is it positive for Aurobindo Pharma, even though it's small? Because this indicates the company's dedication and focus towards biosimilars, as well as in terms of the ability to monetize on the biosimilar front, where they've been focusing and making investments in the last few years. So that is why a positive for Aurobindo Pharma. Sudarshan Chemical is the next stock where we are focusing on. We're expecting a positive move here as well. The board has approved a preferential issue of around 18.7 lakh shares, which is at a price of around 1,043 rupees per share. Total worth of this is 195 crores, and this is to non-promoters, so keep an eye on that. HPL Power, that's also in focus. They've received an order for around 1,522 crores. This is for one of the Kavach equipment locomotives. So on that front, we could see some positive move for HPL Power. And lastly, Godrej Agrovet also in focus. The Gujarat government has allocated land in Barodara, Surat as well as Tapi to the company. And this is for palm oil cultivation expansion. So on the back of that, keep an eye out on all these stocks, expecting green here.
All right, Vinny, thank you very much for that. More stocks with news flow. Vivek is here with that list. Vivek, morning.
Well, good morning. Quite a few stocks on the radar. First on the list is Aeroflex Industries. The board has gone ahead and approved a fundraising proposal. The company is looking to raise close to 400 crore via the QIP route. The other stock on the radar is Afcons Infra. Now, the company has received the letter of award for a project worth a little over 1,000 crore. This is from the MP Metro Rail Corporation. Remember, order inflow as far as H1 was concerned was close to 8,925 crore rupees. The company's order book close to 38,000 crore rupees at the end of Q2. Now, when you're talking about Borosil Renewables, along expected lines, there is a board meeting that the company is holding on December 18th. The company is looking to do a fundraise, and the fundraise could be either via an equity share issue, warrants, or a preferential issue. And lastly, Seagull India, I expect some bread on this particular name. State Highways Authorities of Jharkhand has cancelled a 207 crore worth project that the company had earlier won or had emerged as the winning bidder. Now, this particular order has been cancelled due to administrative reasons as per the cited clause in the request for proposal. So, expect some bread as far as Seagull is concerned.
Okay, thank you very much for that. Let's do a quick recap then of the top stocks. Stocks with positive news flow are Dixon Tech, JK Paper, Aurobindo Pharma, Sudarshan Chemical, HPL Power Systems, Godrej Agrovet, Afcons Infra, Aeroflex Industries and Borosil Renewable. While the only stock with negative news flow today is Seagull India. We will slip into a very short break on that note. On the other side, we'll connect with Prakash Diwan for some fundamental stock talk. We'll also invite the management of Astra Micro to talk about the big order inflows in the defense sector. Remember, the Cabinet Committee of Security approved 2 orders for 21,000 crore rupees recently.
Welcome back. Well, we've listed down all the top stocks that we're tracking for you. Let's get into some more fundamental analysis. Then we have Prakash Diwan who joins us on the show. Good morning, Prakash. Hope you had a good weekend. Well, let's focus on one of the top stocks, Dixon Technologies. And everyone wonders how expensive is expensive. But I think the way the street looks at it is, if a company is going to grow well and there's a good amount of potential and a sector tailwind as well, they don't mind paying top dollar. And that's perfectly reflected in the stock price of Dixon Technologies. Now, yesterday they announced about this tie-up with Vivo for mobiles, which I understand that the average selling price per part to Vivo will actually, in fact, be better than what they currently get. That's a probability. What's your view on the stock? Because it's no longer cheap.
Good morning, Nigel. Thank you. I think you're right. There is no way you can justify these valuations to make fresh entries. It's like a fast train, non-stop train passing by. You're standing on the platform. You just have to wish the passengers good luck, and you miss it. There's no you'll have to wait for the next one. The thing with the visibility of earnings that Dixon has been able to manage in terms of its order book, notwithstanding this particular arrangement with Vivo, is so strong that very few people who own the stock would want to exit, right? And there's a fair smattering of institutional holding there, and you can see the structure. The cap table is very clearly skewed towards institutional holding it and retaining it. So it's going to be extremely difficult to anticipate a sell-off, which could bring valuations down, unless there's a market sell-off which is so wide that even Dixon won't be spared. But barring that, it's going to be extremely difficult to buy into this stock. On valuation which could be reasonable. So if you have it, keep enjoying that, holding it and making sure that you ride at least the next 3 years visibility of earnings, which is there through their contracts, is very clearly going to be very rewarding. So quite positive on it, but as I said, extremely difficult for somebody to buy into now.
Prakash, hi. So on Friday, everyone was talking about Bharti. It was the top gainer. Jeffries said, even ICICI Securities, they're all calling it one of the top picks for 2025. But the mover in the telecom space has actually been Bharti Hexacom. It listed earlier this week. The issue price was 570, and now it's knocking on the doors of 1,500. It's a 2x return on Bharti Hexacom. So where do you stand on Bharti Hexacom? Is there still upside triggers left for 2025?
Good morning, Rima. So I do agree, and you actually were right in calling this out way back when it got listed in terms of how the business was so strong. What's working in favor of Hexacom is the simplicity of its business model. There's linearity in that. There are no ifs and buts or overhangs that you be worried about as much as in the parent stock. The parent stock has a lot of triggers which may not fire off on time in terms of your anticipation. But let me tell you, Bharti, the way they've kind of positioned themselves to take on this expansion that's underway on 5G in some of the markets and then monetize it, they'll probably be up there leading that ARPU move up. And I think they will benefit. So I would still buy Bharti Airtel rather than Hexacom, where Hexacom's done well, not taking that away. But from here on, it would probably start kind of consolidating. There's really not much of fireworks in store.
Okay. Bharti will start consolidating. By the way, Prakash, hi, morning. What's your view on the entire insurance space? I mean, we've been, of course, reporting on it. And our colleague Yash has been reporting all the changes, lots of interest. I mean, and interest one way or the other. I mean, those who already own it want to know whether this is all happening. So what should they do about it? And there is a Jeffries note on Max Financial, the name change which has now been effected. But all of that is now, it's good. I mean, it's a positive note, but it also shows, especially for Max, I mean, the deal which was done in a way because of the bank assurance partnership, which which the regulator now wants to clamp down on. They're going to come out with regulations, a consultation paper, etc., to reduce dependency on parent bank and bank assurance as a channel. So just your thoughts there, Prakash. Which way would it go?
Yeah, good morning, Prashant. That's an interesting theme that you picked up. And let me go straight to this report that you alluded to. Axis, the bank, does about 45% of business for Max, and the regulators probably wanting to move this to 25 over a period of time. And if that timeline is not very short, I don't think there will be a challenge. Max has always been very strong on the quality of its agency network. They've had bank assurance that gave them the volumes, but the quality of business, especially on term products, I can personally vouch for, have been extremely strong in terms of the flow from the agency network. They have few agents, but very high quality, large agents. So it's not going to be difficult for them to de-risk themselves from this bank assurance dependence. And the second trigger, which they could very well benefit more than others in terms of this thing, because they don't have a general insurance business, non-life insurance business, unlike an ICICI and HDFC, which have two arms any which ways. So the integrated insurance platform that could get allowed will actually be a very big upside for them. So I think, and from a valuation perspective, also they're not expensive in my view relative to some of the other names. So I always like the approach to go for a basket, but in case of Max, it still has its salience intact, and of course GST exemption and all that are additional things. But I'm not relying on that. On the core organic business growth, it definitely is strongly poised.
All right. Just one more quick question, Prakash. A couple of companies have won order wins. Whether you look at HPL Power, Afcons, RITES. Any of these three you like? All three of them had some news flow in terms of order wins over the weekend.
So, the most underrated out from this list is Afcons. I think it came with an IPO, got listed in times which were not very exuberant, which is good for investors. But if you see the quality of orders that they keep getting, the kind of execution skills that they have, I think this company will get re-rated at some point in time. It's just a matter of the float getting adjusted, the price discovery getting into an equilibrium state. RITES, of course, is on a, it's been chugging along. It's interesting to see the kind of nature of orders that they're getting are more complex now and beyond just, simple orders executed for the railways. HBL, I think, is priced in quite well. There was anticipation after Connex got the order that HBL and Medha would also follow suit, and that's happened. So from that perspective, I don't think there'll be too much of fireworks there. But Afcons, yes, out of the three names that you mentioned, I definitely believe would benefit more from a longer-term perspective and from this immediate short-term on this back of this 1,000 crore order.
Okay, all right. Prakash, request you to stay with us. We want to know what's your picks in the defense sector as well. For the time being, let's focus on that space itself. The sector has witnessed big order inflows lately. The Cabinet Committee of Security has approved orders worth around 21,800 crore rupees. To discuss what this means in terms of order inflows and what's the outlook for the next fiscal, well, we're joined by Mr. Atim Kabra, the Director of Business Development and Strategy at Astra Microwave. Hi, Mr. Kabra. Good morning. Always good to see you, Ben. Well, give us a few details. I'm looking at an ICICI Securities number. They're saying that this could potentially be an opportunity for BEL, particularly on radar and EW systems, which in turn will trickle down to Astra. Do you agree? And what could the opportunity size be?
See, these 12, good morning. Good to be back here.
Good to see you as always.
Absolutely. Thank you. The Su-30 order upgrade, as that note itself mentions, has come in within 15 months. And that's quite significant and shows the intent of the government and the compressed timeframes in which the entire process is happening now. And that is very, very significant. Now, Su-30 upgrade is going to happen. MiG-29s are there. And of course, the Tejas rollout is happening. I think the capability set of the industry, especially in the radars and EW segment, has been very clearly brought out. And these are the things which are leading to the kind of order flows which we are seeing. It can only accelerate is what I can tell you.
Morning, Prashant here, and good to see you, Atim. Just so this is the Sukhoi, right?
Yes.
Su-30.
Yes.
Okay. And could you tell us
84 more numbers are expected. These were 12 engines which were put through at this time.
So what is being done for the Sukhoi here in terms of indigenization? What is this order for exactly?
The order which was released was for 12 units. That was engines. Okay. And now we are talking of the existing portfolio of Su-30. They are going to go in for an upgrade.
Okay.
So mainly in radars and EW segment, those planes are being updated for the times. And a lot of it, I believe more than 60% is going to be indigenized components out there, which is a very significant opportunity for the domestic industry.
Okay. For specifically Astra Microwave.
Yeah, Astra will be playing a role out there.
Sure. For
playing both these parts. Yeah.
Right. So this 21,000 plus the upgrade, could you give us a sense of what the total value of work could be and what could come Astra's way?
Astra is hoping to get a role both in the radars as well as the EW segment. So, it's very difficult to put a number onto that, right? But as you know, see, these are building blocks now which will come in size on a continuous basis. So if you recall what we had said last time we spoke, we said in the story is just about beginning, right? Wherein the product portfolio has now reached a stage where we can replace the original systems. And most of it is being indigenized, okay? So these are just the beginning blocks which have started taking place for a multi-decadal opportunity for the entire defense sector.
This 60% indigenization component, that's official, right? Or it's just an expectation right now?
That's expected. That's expected.
It's expected.
Yeah.
Okay. So are you on track then to meet your order book target of 1,200 to 1,300 crore for this year and a revenue guidance of 1,000 to 1,100? Or can you exceed it?
No. We hope to always exceed it, but we are on track for 1,200 crores plus. You've just seen the recent order which was announced, which came in on the ARC. See, guys, Astra comes embedded with Astra Rafael ComSys. And that itself is a business in SDRs, which can be massive. It can overtake Astra. So when you look at Astra, you have to look at the components which constitute Astra. The growth element which we discussed last time and which I was told when you talk about the business outlook, the new segments which are opening up dramatically, for example, space, where we have within India a capability which exists in the form of very competent companies like Anant, like Azista, Tatas, etc. Where collaborations are there. So what do we try and do differently? We will try and create the entire satellite as a made in India, indigenous, with payloads which are completely indigenous. And, with constellations of satellites happening, EOIs are already out from Government of India in space, etc. We are talking of some mega opportunities which can dwarf the traditional business, which is going to be the backbone and mainstay. But satellite in itself, you're looking at software-defined radios, and these are significant opportunities which can create multiple Astras in themselves. And that's what excites us, and that's where we are focusing a lot.
Mr. Kabra, if you could just help us out with the number on profitability. Your market capitalization is close to around 8,000 crores. I think the stock had run up very, very strong till the middle of 2024, and then it cooled off from that, I think, that 1,050 odd mark, very, very roughly. The street is very optimistic on the prospects, and you're also sounding very bullish. Last year, the profit number was just 120 crores. Say in the next 3 years, what do you think this profit number could look like? Because otherwise it becomes hard to justify 7,500 to 8,000 crores of market capitalization. So a rough estimate that you would have in mind.
I am not an expert on the markets, but having said that, I don't think market looks at a year or a year and a half as an opportunity, right? They look at a fairly significant time frame, and I guess they discount the prospects back. So, and I think that is what is being reflected in the relatively high valuations which people speak about in the segment. But if you look at a sector which is as fundamental as infrastructure, which has more than 3% of the GDP, which is allocated for us, wherein a huge amount of domestic inflow is, order book is coming in. You're talking of, huge building blocks which are being put in place. And I guess that is being discounted upfront at this point in time. Stocks do consolidate. I think it's the delivery which matters. We will deliver what we have said is a very, very strong expectation.
That's why I want to know what is your 3-year projection, sir. As you said, the market is not looking at the near term and stock prices will do their own thing. But in terms of profitability from around 120 crores, do you think the net profit could be in the vicinity of 400, 500 crores, say by 2028? Going by your order book, going by the kind of visibility you get, and going by the center's focus on defense, do you think it can be in that vicinity 400-500 crores or?
I'll be surprised if we don't reach that kind of a number. So,
thank you.
The domestic component is increasing, right? The deemed exports are decreasing. So it's a relatively higher margin business. And all these orders are getting into production now, right? So as production happens, scale comes in. As scale comes in, right, your impact on your bottom line is very, very significant. And I think that is what you will see.
Appreciate you joining in, Mr. Kabra. Thanks a lot for giving us those details. And as you said, it appears the longer runway looks quite good. And you're sounding quite optimistic as well on the prospects of the business. Well, let's go back to Prakash. Prakash, you know, a company that did around 120 crores of profitability, they'll be surprised if they're not at 400-500 crores in the next 3 years or so. Your view on Astra? And also, if you could help us out with what's your top bet in the defense space?
So, Nigel, on Astra, it definitely sounds quite exciting. And we hope and pray that there's no miscarriage as the execution takes off. But this is going to be a very critical phase. From an order book of 2,100 crores last quarter to incrementally 3,600 or 3,400 crores for the next couple of years means that they could have revenue, trajectory which could go into the 1,200, 1,500 crores a year at some point in time. And that does translate into good profits. But the problem with this segment is that order flows can be very lumpy. The execution can probably be much longer than what you expect. So otherwise, there's absolutely nothing wrong, but it's just the anticipation has built in too much of valuation. So the comfort is slightly lower in most companies. I'm not specifically talking about Astra, but and answering your second part of the question, to be honest, the only company that I feel very resilient, find resilient and very dependable on execution in this space is L&T. Now, you don't normally take L&T's name in the same breath as HAL or a GRSC or all of these fancy names. But from a valuation, comfort, execution track record, and the optionality of other things balancing out anything that goes wrong or slows down on defense execution is absolutely very comfortable. So look at L&T from a different perspective. And I think it will probably surprise people on how much defense starts contributing to its overall profit pool rather than just the top line.
Okay, we'll slip into a very short break. Stay on, Prakash. On the other side, we'll also connect with Mitesh and Sudarshan for some technical trading ideas.
Okay, welcome back. We got Mitesh and Sudarshan with us to take us through what they would like you to do. 10 minutes to go for the pre-open session. Gentlemen, good morning. Great to have both of you here. Appreciate your time. Sudarshan, you go first. What would you recommend viewers do? I mean, Friday, I missed Friday's session. I was not in town, but it was a manic sell-off, then a frantic recovery. Do you think, the general skew is going to be on the positive side? Because we did, in terms of recovery, what we did by close on Friday. Go on.
Yeah, good morning. It is on the positive side. For the last 10 or 15 days, I have been saying the markets are going up. Stay long because you can't predict when a breakout will come from a trading range. And that's exactly what happened. We had a big breakout on Thursday and then on Friday. And the idea is that the volatility will persist. Have you noticed something? On Friday, sensex was having a weekly expiry and we had massive volatility. Prior week, the Nifty on Thursday was having a weekly expiry and we had massive volatility. So the suggestion to retail traders is avoid doing expiry trades because this volatility on two weekly expiries is likely to persist. That's an aside. For the Nifty, the trend is up. If you look for a dip, wait for a dip, and if you get a dip, go and buy it.
And what would be the appropriate dip level to go ahead and buy, Sudarshan?
It's very difficult to say that, Rima, because the markets can open 100-point lower and then go another 100 or 200 points. But even then, I'll give a very rough idea that somewhere around 24,600 would be a decent level to enter.
4,700. Mitesh, come in on the index trade for the morning.
Good morning. So, on Friday, when we were below 24,400, 350 zone, I was worried. But then the miraculous recovery happened. and we closed much higher from those levels. So I think the first level to watch on the upside is about 24,800, 820. And in that sense, we are not very far away from that. So again, as Sudarshan also mentioned, I think the idea is to buy on declines. And for me, I think any trade closer to about 24,700, 680 zone, that's my buying range. And then I'll keep a stop, 24,620. And 24,800, 820 is the first target. In case we clear that, then I'm even looking at a test of 25,150. So the stance is positive. But given the fact that we are close to the supply pivot of 24,800, 820, best to buy on declines.
Okay, no, got that. Mitesh, morning. What would you do in terms of specific stocks?
Good morning, Prashant. On the stock side, I have more of buy calls. Delivery is a buy. If you get a 2-3 point dip, even better. So around 388, buy with the stop at 379 for targets of 408. ICICI Bank is a buy if it clears 1350 odd level. So buy about 1350 is close at 1344. So buy 6-7 points higher. Buy about 1350 with a stop at 1334 for a target of 1395, and a buy on REC with a stop at 549 for targets of 572. One sell call, that's Oil India, keep a stop at 462 half for targets of 437.
Sudarshan, what would your stock calls be for Monday morning?
Yeah, first, I had suggested 24,600 as a support, not 700. And second, this is for Prashant. I just saw, and the color of his jacket is very attractive and pleasing. Now for the trades. All right. Britannia is a buying opportunity, and consider buying with a stop under 47.70. Coromandel is a buy, stop under 17.40. Havells has already been in an uptrend, so now it's a consolidation after an uptrend, imminent breakout. We are all assuming that the breakouts for all the stocks will be on the upside because the trend is up. Havells is a buy with a stop under 1700, and Lal PathLab is the only intraday short. The stock has been underperforming, so consider going intraday short with a stop above 3050.
Long Britannia, Coromandel, Havells, and intraday short on Lal PathLab. So Sudarshan, thank you very much. Mitesh, thank you very much for joining us. And we'll speak again soon. So 5 minutes to go for the pre-open session to kick off. We'll take a break. We're going to be back again with Balaji Subramanian of IIFL Securities. We'll discuss the trends in the telecom space. That's coming up.
Okay, you're watching CNBC TV18 Bazaar Morning Call from the CNBC TV18 Motilal Oswal studio. Prakash Diwan is still with us on the show. Prakash, any other stocks that you would like to recommend for us towards the last 2 weeks of December? Santa picks?
So I would rather enjoy Christmas from a different perspective than buying stocks. But, from one of the stocks in the news today, Rima, we had JK Paper that I think you guys discussed. My sense is, if you look at this, not just because of the fact that it's coming to the news, but this consolidation was planned for quite some time. There's a lot of family issues that the group is trying to sort out in most of the companies. This consolidation will actually make a lot of sense for them to improve their margins here on, because of economies of scale and overlaps being reduced and all that. And with all of that, at 7,800 odd crores, it's available at under 10p on a trailing basis. Of course, the entire sector is about 18-20 times, so it's not that this is something which is discounted too much, but it's half of the sector averages. And my sense is the kind of sales and profit growth that you have coming from this business is fairly commendable. So it will get re-rated as the sector gets to kind of be re-looked by people. But take a look. It's in the news as well for the right reasons. This should probably be a good long-term pick as well.
I'm not sure if that's paper. And in that same vein, I heard someone talk about tea stocks, and I don't know if something is happening, but we'll figure out. This is just sort of a connection from the price action. Delivery, I think, was mentioned as a trade earlier. I just looked at the stock. It's been an absolute disaster of a name if you own this for over a while since listing. but it's moved up 20% quietly from the lows, 330 to 390 as of Friday's close. Anything changing at the margin? This was at one point seen like an e-commerce proxy, like a Blue Dart or something. I mean, any thoughts here?
So, Prashant, if you actually, what you're talking about is a move in recent time, but if you take the lows that it went to post the IPO disaster, and very clearly the IPO became disastrous because of the kind of overzealousness in pricing the business at that point in time. This was the wave where you had Nykas and Paytms and all of those coming to the market. From a business standpoint, if you see their commentary, the kind of things that they were doing, they've narrowed down on some few of the verticals, few of the segments, which are very profitable, and these are volume driven as well. It's not that they're compromising on revenue growth in any sense, but the efficiencies that they can build on. And remember, this is still a very fragmented market. Delivery still owns a significant market share, and that is only getting consolidated with more players coming into the picture. So, there were doubts whether the quick commerce would impinge on their ability to grow from the traditional e-commerce lines, but that hasn't grown, and more people are kind of getting to use these things. So I think it's definitely a re-rating that's underway and could still have much more legs, provided you are patient enough to hold on for the next couple of years when the EPS resets to a higher level from where it is, and it will stop looking expensive in that sense.
Okay, so bullish on delivery, the re-rating will continue, and the quick commerce impact on e-commerce hurting delivery perhaps is a bit overblown, according to Prakash. Thank you very much for joining in. Now let's turn our attention to Telecom, a recap of 2024 and the outlook for 2025. Now, 2024 has been a mixed bag for Telecom. On one hand, you've got a Bharti Airtel, which has moved up close to 63% year to date. But you also have Vodafone Idea, which has seen a fall of more than 50% so far this year. Balaji Subramaniam, is now joining in. He joins us from IIFL. He's the Vice President of IIFL Securities. Balaji, thank you very much for joining in. Let's start with the big boy, Bharti Airtel. 2024, good year, 63% kind of rally. But it also benefited because we got tariff hikes this year. What about next year? What are the triggers for Airtel going into 2025?
Good morning. Thanks for having me on the show, Rima. As far as 2025 is concerned, the key things to watch out for would be from a Bharti Airtel perspective. I think it will be more of the same, where we will see ARPU steadily inching up until we see the next round of tariff hikes, which I think probably should happen sometime in the second half of 2025. So that is one. The other thing is I expect the capex intensity to keep coming off, especially in India. So that would mean that you will have ARPU and EBITDA going up, while capex also will come down, which would result in healthy FCF generation for Bharti, and subsequently we should see deleveraging of the balance sheet. The other key thing to watch out for would be not just for Bharti Airtel, but for the industry as a whole is what happens on the satellite broadband front, because the TRAI has been working on the modalities of spectrum pricing and allocation of satellite spectrum. So we'll have to see what happens there, and whether Starlink ends up getting a license, and what exactly is going to happen on that front. But my take is that satellite broadband still has a long way to go before it becomes anywhere close to competitive versus terrestrial services. The other thing
Sorry, just to follow up, but if Starlink gets a license in 2025, do you expect derating for Bharti Airtel? While you're saying it's not immediate competition, but how are investors viewing this? How will they view this development if it comes?
So I think you may have some, volatility around, the news flow on Starlink, because at the end of the day, the stocks, the telecom stocks, especially Airtel, Hexacom, have rallied quite a bit during this year. So I wouldn't, rule out some section of investors to probably end up booking profits when you have these news flow on Starlink coming in. But that said, from a fundamental perspective, I don't think one should see any dent in terms of business prospects for the traditional terrestrial telcos.
You were telling us the third trigger. One was satellite, the first one was tariffs, and the third one?
So the third one would be especially what happens in terms of Vodafone Idea's fundraising, because they have raised about half of the funds required for capex through equity, and the other half of debt is where things are stuck up. So one thing to watch out for would be when Vodafone Idea is expected to arrest its subscriber losses. So if subscriber losses continue maybe after May, June of next year, I think that is some time where people might start building in a higher steady state revenue market share for someone like Bharti. So that is one. And finally, any potential IPO of Geo platforms also has to be watched out for, because that would also, depending on the valuation at which that IPO happens, that can keep telecom stocks buoyant during the next year.
Let's talk about Vodafone Idea, right? You said they only managed to complete half of their proposed fundraise, only the FPO. But the FPO, saw a lot of demand. It was subscribed 6-7 times. The stock went up to levels of 19 rupees. Now you've seen it come down to rupees 8. Now suppose on this curative petition on the AGR, the recomputation of AGR dues, right? If it turns out to be, a complete adverse outcome, there is no hope on that. What is the fair value of Vodafone Idea in that event?
So I think the street more or less bakes in the aspect that there may be no longer any AGR relief front, at least on the present value side. Of course, if there is any present value relief, if the government is able to conjure up any present value relief, then great. But I think one way of providing Vodafone Idea some relief could be by extending the moratorium on spectrum payments and AGR payments, which is set to expire from October of 2025. So if that is pushed out a little bit, then you will see that the cash flow position of Vodafone Idea would significantly improve. And that would mean that they would have a better shot as far as debt raising is concerned. Already we have seen that the government has allowed waiver of spectrum related payments pertaining to pre-2022 auctions. So these two might, would give Vodafone Idea a better shot in terms of raising debt. And that would mean that they would be able to continue their originally announced capex program of around 50 to 55,000 crore investments between FY25 and FY27.
All right, Balaji, always good hearing your thoughts. Thanks a lot for joining in and helping us out with that. Wishing you a good day ahead and looking forward to chatting up with you rather soon. But it's 9:10, so let's get in our technical guest back with us. Sudarshan joins in. Sudarshan, what's your 9:10 call?
Well, consider buying Coromandel with a stop under 1740.
Got it. Coromandel out of the way. And Mitesh, what about you? Mitesh, you're on mute. We'd like to hear your pick.
I was talking about delivery, which I would recommend buying with the target of 408.
Okay, thank you very much for that. Let's get to some stocks you should have on your radar as we prepare for market opening. Sudarshan is with us for Max Financial. Sudarshan.
So, Minister of Corporate Affairs has approved the change in the name of the company of Max Life to Axis Max Life. And now Jefferies has come out with a note. It has a buy call and target is 1,660 per share. It says change in the name of the company will enhance the brand recall, especially in Tier 2 and 3 cities, as Axis Bank has a strong brand in Tier 2 and 3 cities. Also, some of the positive catalysts that it has mentioned. First, company can gain from exemption of term protection from GST, allowances of composite license, and there can be merger between insurance and other firms. But norms on banca insurance will be watched out as Axis forms 45% of APE for Max Life. As far as valuation is concerned, Jefferies finds valuation attractive at very current level. That's the reason it has a buy call on the stock.
Thank you very much for that. We're watching for IT stocks also because Citi met with the management of many IT companies. TCS, HCL Tech, LTI Mindtree, Persistent. And here are some of the key takeaways. On the financial sector, there appears to be a fair amount of consensus that the green shoots that we saw in the September quarter is still very much intact. So HCL Tech said the discretionary spending saw an uptick in August, particularly in BFSI, which has continued into October, while LTI Mindtree says that the vertical indeed has seen an uptick in demand and continues to hold. So that's the key takeaway on financial services, that the recovery holds and is continuing. On retail, TCS says that we've seen a positive outlook for the holiday season with potential trickle-down effect, which could lead to overall improvement. So the outlook on retail also appears to be fairly upbeat. On manufacturing, though, the outlook is soft. So HCL Tech is calling out the auto segment, particularly, that continues to be soft, while TCS says that in the near term, there are challenges related to supply chain and labor. On tech, it's a mixed bag. So HCL Tech is saying that they are seeing signs of a pickup, but they will monitor to see if it sustains. While LTI Mindtree also concurs, it's a mixed bag. Some accounts are performing well, some of them are tightening budgets. Furloughs are likely to hold. Now, Citi is largely bearish on the IT sector because of valuation. So they've got a sell call on TCS, sell call on LTI Mindtree. On HCL Tech, they're neutral. But on Persistent, they are bullish. They've got a buy call with a target price of 6,100. So on Persistent, when they met with the management said the clients are a lot more optimistic with the US election and Fed rate cuts behind it, but that will take time to reflect in the budgets. Priority for Persistent is growth over margins because according to them, margins can be recouped over a period of time. And on generative AI, they're talking about 25% productivity benefits and it will not be deflationary. So that's the broad overview of what Citi took away after meeting many IT managements.
All right. IT in focus and Persistent specifically is the one which Citi is kind of sort of picking out of the pack. Dixon is the next one. So I think they've got pretty much all large Android makers on their platform now. The last one got added, as we told you earlier, Vivo. I think Upasana is here with details. Upasana.
Good morning. First up, let me start with Dixon. This stock remains in focus today as well, as Dixon and Vivo India enter into a binding term sheet for a proposed joint venture to undertake OEM business of electronic devices, including smartphones. Now, Dixon will hold 51% of the share capital and Vivo India will hold 49% stake in the proposed joint venture entities, what the company has indicated. And this facility will undertake Vivo's OEM orders of smartphones in India and will also engage in OEM business of various other electronic products of other brands. Now, earlier this month, the company had also announced that it has launched mass production of Google Pixel smartphones, and company's wholly owned subsidiary, that is Pagid Electronics, had entered into a contract manufacturing agreement with Compal for manufacturing of mobile phones. And the commercial production for this at Noida unit has been started, is what the company has highlighted. So on back of all these news, Dixon remains in focus today.
All right. Upasana, thank you very much for that. Stock's up about, 1.4% or so as we speak right now. I mean, it's a quiet kind of a start, and I think we'll have the first rates in the market open coming up in a couple of seconds from now. 15 points lower on the Nifty. We're at 24,750-ish. And of course, I mean, the sensex at about 82,000, about 100 points or lower. So slightly sideways, softish start is what you are working with. Hopefully we will have a more settled and not a one-way day, but of course, nothing like what we saw on Friday with that big sell down and that big recovery coming through as well. Mid-cap index is up about a quarter. And I think with the small cap index, which are also starting slightly in the green. First rates and lots to track. We'll look at the indices and we'll get to individual stocks as well. So not very much to show as far as the first sort of trades are concerned. We are absolutely flat, but blinking red and green. 24,765. Nifty Bank 0.25% lower. 53,470, 460. The sensex is starting slightly lower, 0.12%. The mid-cap index is up about 0.25% or so. So I reckon even in the within the first minute or so of opening, more action as far as broader markets and some of the mid and small caps are concerned. The heat map should come up on your screen, give you a quick sense of what the start is looking like. And there you go. more down than up. 30, I think about 25, 30 odd names are lower, and the others are starting up in the green right now. So not very much to really show for it as far as the index is concerned. 24,733. We're starting about 32 odd points in the red. Let's just quickly look at a few stocks as we sort of, kick off things here. And I think Nigel is with us. So Nigel, why don't you take us through stocks?
Well, that's right. A few stocks that are moving around today. You have Happy Forgings. They bagged a 140 crore order to supply crankshafts. So that stock is up close to around 5%. You have HBL Power. They bagged an order for around 1,522 crores for Kavach equipment for one of the loco works. So that's why, in fact, that stock, has done quite well as well today. That one is another one that's buzzing around. RITES bagged an order for around 300 crores from MEA for integrated check posts. That's another stock that's buzzing around in trade today. Dixon Technologies, they have signed a binding term sheet with Vivo India to form a JV to undertake some OEM business here in India. And in fact, that could throw up a big opportunity. Stock at a fresh high, making another high in this morning's trade. Lokesh Machines, Mahindra & Mahindra has cancelled the supply of auto components orders. Keep an eye out on that stock. And also keep an eye out on Bombay Dyeing. The volumes are fairly decent right now. Reports suggest that Mr. Jay Vadia is returning as the director of group companies. It's seen that he's going to retake top position as an MD at Bombay Dyeing. So that could be another stock that's in focus. But a good start to trade, particularly for the broader markets. The breadth of the market is telling you a picture. 1,500 stocks advancing for just 500 stocks that are declining. Though the headline index is down 20 points, you'll have to say that's a good start to trade today.
Oh, absolutely. And, broader market, I think, is what makes all the difference. 3-1 in favor of advances as we begin the day. The biggest volume-led gainer, by the way, and it's all broader markets, is HBL Power. It's about 730, huge. I think it's a 10 bag over the last 3 years. And it's up 5%. Large volumes are coming through as well. This is a big underperformer. Cosmo First, stock's up about 7%. It's really not gone anywhere. But from the lows, it's come up a little bit. 740 was the recent low, and back to about 890. The only reason I'm mentioning is because volumes are really high. I think Nigel mentioned Afcons. So these railway rolling stock names, Kernix, for example, is up 5%. Maybe we could look at some of the others like Titagad, the RVNL and the Ircons, etc. Of course, need no special reason for those stocks to do well. But these have been doing well. Last week, I think they did well in the second half, and they're doing well today as well. Premier Explosives, I think, 7.5%, 8% higher. Decent sized volumes again here. And Wockhardt Pharma is starting with about a 4% pop this morning to begin the day. On the downside, Angel is the top number one volume-led loser. It's down 1.5% in terms of price cut. Ixigo, the OTA, is down about 2.5%, 150. Newland Laboratories is down about 1.7. KPR Mills is down about 2% or so. Titan is down nothing. Actually very small, 0.5%, 1%. Those kind of changes are coming through. And maybe just take a quick look at Gokuldas Exports as well, because last 3-4 days, it's come up very, very nicely. I think it left off at about $1,200 and took out its, for 12 months stock did nothing and then saw a sharp breakout over the last 6-7 days. And now it's okay, 1197 or so not very much on it. So 40 points to show for it, but this is the very, very initial couple of minutes of market open. Let's get an outlook going for 2025. Last couple of years have been great. What is 2025 going to be like? We have Gautam Chachoria, Head of Global Markets India, and Tanvi Gupta Jain, Chief India Economist at UBS Securities India, joining us right here in our studios. Gautam, Tanvi, great to have both of you here. Appreciate your time. Let's just start at a very simple, basic level. It's been a good last few years, right? Actually outstanding if you look at broader markets, not measured by just the Nifty per se. 25, Gautam, are you starting with a positive skew, very positive skew, or kind of a more tepid kind of, what are enthusiasm levels like?
Well, I'll start. Thanks for having us here from UBS. Yeah. I'll start with a mix of two things. One is our EM strategist. He's still underweight India on a relative basis for 2025. If I speak to investors and then the feedback I'm getting, look, it basically boils down to policy stance and reforms agenda. India underperformed last few months largely because of the earnings miss and growth surprises, not necessarily because of India, China, and what's happening globally. Those, in our view, were small factors. The bigger factor has been the slowing growth here.
And you said policy stance. You
Policy
mean
stance.
monetary or fiscal?
Monetary and fiscal both. And monetary also, Tanvi is the expert there, but mix of both rates as well as a liquidity stance.
And you think the slowing that we've seen in the recent months is because of that?
You could ascribe a large part of that. Again, both monetary, one of them doesn't work in itself. It has to be together. So when both of them were, in a way, slowing down or forcing growth slowdown, in totality, we saw the surprise or negative surprise to some extent in 2Q earnings or in the GDP prints.
So that gets us to Tanvi. It's all stance, both fiscal and monetary. On fiscal, there is broad agreement that government spending there's no option, but it has to pick up in the fourth quarter. Monetary, it's kind of less clear. So just your first thoughts.
Sure. So if you look at the growth momentum in India is clearly slowing. And I think early 2025 we'll get to know what is the likelihood of US imposed tariff hike on China. And that will definitely lead to more downside risk, not only for India, but as well as the global economy. So I would say India definitely needs a monetary as well as a fiscal policy support. Fiscal policy at this point, we have seen the government capex spending has been lagging. Year to date, capex is down 15%. Even if I expect that the government will be increasing the capex spend by 30% in the remaining 5 months, the full year capex is only going to be 4%. So clearly, I think at this point, there is definitely a need for monetary policy support as well. We have a 75 basis point rate cut expectation starting the Feb policy of next year. Obviously, a focus will be more on how and the timing of the rate cut, especially with the weaker FX. But looking at the real policy rate in India, adjusted for the GDP deflator, at the upper quartile or the 10-year upper quartile, definitely there's a room for a rate cut in this cycle.
Okay. Hi, Tanvi, as well as Gautam, and good to see you all in the studio. Thanks a lot for coming down. Well, a quick question on the current GST rates. I was speaking to a couple of experts last week, and some of them indicated maybe the government should look at lowering GST rates. That could be one of the measures. Do you agree or you don't think so?
I think in the past we have seen that if you reduce the direct tax rate, it may not have a direct impact on the economy because I can use that lowering of income tax rate to boost my savings rather than really boosting my consumption. But a cut in indirect tax rate generally tends to have a much larger impact on consumption spending because it's a tax on consumption rather than a tax on my directly income levels.
Yes.
But I would say a GST council has to decide. It is not so much to do with the government.
Yeah.
Eventually, the GST council has to take a call. And the GST collections have been buoyant. The tax revenue in India has been buoyant. So maybe we can look at specific products where we want some easing in the GST rates. But definitely one idea which is already going on in the market and should have or should bode well more for consumption.
Okay, on select items, maybe some kind of a cool-off could bode well. Well, Gautam, you come in. You've given us an answer with regard to 2025. But you stop short of giving us estimated returns. 2025, which way would you be leaning? Mid-single-digit returns or high single-digit returns? Or do you think that we could brace for a difficult year, which would mean a negative year in terms of equity market returns for 2025?
Look, there are many moving parts, as always is. But,
indeed.
Even more so now, given the global backdrop of post-US elections, the policy stance there, as well as, look, there's a lot of hope building out around fiscal and monetary. And I'm less worried about what happens to FY25 GDP print and what happens to 3Q or 4Q earnings. I think that's gradually getting priced in by the market. Market knows that growth recovery, if at all, will be slow.
Yes.
What's critical is what scale this policy stance happens at, and therefore what's the outlook for FY26. And I think that's where it boils down to whether it's going to be a tough year or whether it was going to be a single year, double-digit year. Look, valuations in India, I'll worry less given the flows locally have remained resilient. And I don't see any reason talking to all the key clients who have these flows coming in, it's stopping anytime soon. So if the flows will remain resilient, I won't worry about valuations or necessarily market correcting in a meaningful way. Consolidation phase or single-digit, double-digit will depend, to me, boils down to policy stance and reforms agenda. And I'll not underemphasize the reforms agenda part. Look, India also has been a big reform story over the last few years, which has given hopes to market that the long-term growth in India looks exciting. That's taken a backseat along with the short-term earnings and short-term growth because elections, post-elections, now there's no election happening.
There's no excuse.
No happening for many months now. So whether we see a reforms agenda back on the table in the budget, post that, pre that, I think that also plays a role.
Since you mentioned earnings a couple of times, FY26, what are you all penciling in terms of earnings? Because FY25 is not going to be as good as what we thought at the start of the year. FY26?
Analyst expectations in India always is that you have a recovery next year and we go back to low double digits to high single digits. That's a broad range, depending on the sector you look at. But the question is not just that. It's what markets start believing in. If it's going to be a double-digit earnings growth, which is linked to the policy stance, I think markets will be fine. We should still expect a single-digit or even low double-digit returns.
How was 24 in terms of, I mean, so UBS now, do you have a lot of mid-cap coverage, Gautam?
Yeah,
mid-cap, small cap? Yeah. That's where the interest is, right? Isn't it?
It still
because
is.
The larger conventional sectors, I mean, it's a bit thunder.
Yeah.
But broader markets, it's exploding. I mean, the interest levels, activity. So just,
absolutely.
Yeah.
So look, that's a space we want to keep building our coverage on, but going back to where market interest is, clearly among the foreigners, if you go back long, many years, it used to be the big private banks, consumers, IT services, and that's what's been not performing that well in the last 2, 3, 4 years. The interest is broadened out dramatically. We all know, we spoke about industrials, etc. That's not going to change in a hurry. Even now, despite the weak earnings or earnings cuts, those sectors, the cyclical sectors, are still seeing good growth compared to the rest of the markets. So I think that's a continuing trend, and that's what we want to tap on by expanding our coverage. Even today, investors' interest, like we had a conference a month back, the foreign clients, they were more interested in looking for bottom-up ideas around the mid-cap space.
Correct.
So that space is continuing.
Again, it's all single stocks and individual ideas, but there are some themes from where these come from. I mean, new energy transition. I mean, these are all sort of new exciting areas. There are lots of listed opportunities which were not there 3-4 years ago. So any themes you can identify which you think one should look for? I mean, as they say, fish where the fish are. So where are the fish?
So look, the names you mentioned, nothing new for us. Those are sectors and themes we remain bullish on longer term. Our analysts, for example, industrials analyst has been downgrading a lot of names in the last 3 to 4 months, given where the valuations are, given the earnings momentum. But that's a space to be in. Industrials, cyclicals, capex, specialty chemicals. The sectors where we are not so convinced yet at a broader level is pharmaceuticals, where we see very select opportunities, but broadly we see headwinds. The renewable space looks very exciting, very exciting. There's a lot more which can happen versus what's been announced. And we're already only seeing the early stage, you would say, of the listed universe participating in that in a big way.
When you say renewables, what part of the renewables chain?
The entire value chain, from utilities to suppliers to EPC companies. And we've seen the playbook happen in China last many years. It's early stage in India.
Is it driven by protection, though, a lot of it?
Look,
I mean, not right or wrong, but I'm just saying.
But forget right or wrong, but protection is also in the context of what's happening globally. If it's protection happening only in India, then it would be a worry from a longer term.
It's happening everywhere. So
if it happens everywhere, then it's possibly feasible.
Okay, all right. Tanvi, you come in on this. You know, we've got a new RBI governor. Mr. Malhotra takes over from Mr. Das. Some would have argued that maybe, he should have got an extension of, say, a year or so. The bigger problem is the vice captain, so to call it, Mr. Patra as well, could be moving out. How do you see, the new governor in terms of a stance, continuity, as well as the key focal points that he'll have?
Sure, this is not the first time we are having a bureaucrat turned banker.
Indeed.
We did see Mr. Das have a exceptionally good tenure, and he was able to ensure that RBI's autonomy is managed, and at the same time was able to very strongly manage the relationship between the RBI and the government, something which we had not seen in the past, and there were always a lot of frictions which were out there. So we are more hopeful that even the new RBI governor will be on the same path. Irrespective of the RBI governor, our call is still the same, that the inflation is going to soften pretty sharply. We are already seeing the number going down from 6.2% last month to 5.5% in the month of November. Our forecast is saying that the inflation will be softening towards 4.5% by the month of March.
Okay.
So clearly inflation is softening. Growth is showing signs of slowdown, even though we do see some cyclical pickup in the second half, largely because of festive season demand, good monsoons now finally having impact on the rural sentiment, which were yet to be seen. And we are hopeful that the government capex spending will be picking up, even though it is going to fall short of the target. But I would say, irrespective of the RBI governor, we are maintaining our call that the policy stance as well as the rate cut cycle is going to start in India. The question is on the quantum of rate cut, how much opportunity will India have to cut rates, especially when we will see the new Trump administration resuming office in Jan, and what it means for the tariff hikes on China. I mean, that is all in the media. So our US team is expecting that 75% of China's goods get taxed as 60% from the September quarter. In case we do see any preponement of tariff hike, then I think the ability for RBI to cut rates will also get limited. So as of now, we are still having a 75 basis point rate cut, assuming Trump-related tariff hike only come into picture from the September quarter.
Sorry, you said 60%?
60%.
Yes.
China imports into the US. Right, on Chinese goods.
75% of China's goods get taxed at 60% in 4 tranches.
60% is what he said. Well, everyone assumes it won't be 60, it'll be, that's just a starting gambit.
We still have that 60% tariff hike in our forecast. Wow. And that's why we reduced and lowered India's GDP growth to 6.3%.
Because, I mean, the general consensus view is that it's all China. It doesn't have any other impact. India is insulated. But it rarely ever works like that, right? I mean, there are second order, third order sort of implications, and it feeds through eventually.
Absolutely. So there are 3 ways India can get affected. One is a global growth slowdown, largely because of fading China as well as the US growth. And I mean, US growth has been very strong so far. So India is a low beta economy, but India is not immune. So India will get affected indirectly. Second, the biggest risk, I think why we are downgraded India's GDP growth forecast for next year is that the private corporate capex recovery, which has been concentrated in a very narrow part of corporate India, might get further delayed and pushed out. If I'm a corporate, I would have, I always have that option of buying a cheaper import from China, especially when China has excess capacity to offload. And third, and I think the market is not discounting the fact what happens to RMB, because if you compare with 2018-19, RMB depreciated by 13%. China is going to appreciate against RMB. It makes a lot more sense. If I'm an Indian corporate, why not I import from China rather than expanding domestic investment in India? So I would say...
What's your rupee forecast? You think we're headed to...
We are actually expecting rupee to gradually depreciate towards 87. This is based on a 5% RMB depreciation, what my US and China team are forecasting.
Has to be, right? To stay competitive. It has to, I mean, join to the hip in that sense.
Yes.
Tell me just one point. Government stimulus will do the job, and we need both monetary and fiscal. But just there's an underlying worry, and this is a minority view, that maybe growth has now come back to levels where we were before COVID hit. I mean, that quarter, right? So you had this big COVID sugar rush after COVID. I mean, spending really boomed, and the top end really prospered and made money. And if people, especially who held stock, I mean, they made a lot of money, and it went everywhere. And now all that is kind of fizzling away, and you're coming back to trend growth. I hope that is not true.
No, absolutely not. I'm not of that camp, because I think the macro stability risk has improved dramatically since the COVID-19, before even the COVID-19 shock. Your balance sheet is much stronger. Corporates have used COVID as an opportunity to deleverage. Asset quality of banks, despite that massive credit boom we have seen, is still very much, or I think one of the best we have seen in 10 years. Right. Before the COVID pandemic happened, the growth slowdown was also partly because of NBFC crisis related after effect. I don't see much of an impact right now. So I think India is in a much stronger, much better position than what we were pre-pandemic. So definitely, I think the trend growth is more towards 6.5. That time we had reduced our trend growth to more towards 5.5, 6. So clearly, we are much better than what we were in 2019.
All right, Gautam, let's get you in then. I think all of us dream of having a better house, maybe a better looking one, a larger one as well. I've personally pushed back my plans for a few years, going by the kind of pricing that we're seeing. But that's a sector that y'all are clearly quite bullish on, right? Real estate. It's come back after a while. It's enjoyed the last 2-3 years or so, but you all believe there's a further runway from here? What's the geography you're most bullish on? And if you could help us out with some key points.
So look, it's a broad view on the property sector, not just geographically. The argument being, like it's a cliched term, is this time different? But that's the argument our analyst is using, that this time is different, even though there is discussion that property prices have gone up. And the analysis is based on the usual matrix of affordability, inventory to sales ratio, demand supply, the structural demand trends, etc. On all the metrics, Indian property cycle is far away from reaching its peak. This is at the fundamental level. Now let's look at the stocks. Without mentioning individual stocks, even at the sector level, we are nowhere near peak in terms of where the valuations historically have gone to, or even globally, where we see properties are a very deeply cyclical sector, and there are accounting variances. But even then, what's the delta from bottom to an upcycle in terms of multiples? Indian property sector has a lot of legs left to go. So again, it's not just a 6-month call. It is one of the structural calls our analyst is making, and we all as a house are backing. That property sector in India still has some years left.
Number of 100 crore houses which are being sold. I saw a report on the newspaper over the weekend. I mean, just amazing. So I think that's a faster selling category, maybe, right?
So that could possibly reflect the wealth creation we are seeing in the country. And again, look, that's not the market of the sector. Yeah. That's a small part of the market. The sector.
But it's still premium because affordable is not doing well. I mean, there's no supply affordable, right?
Absolutely. So again, when we say premium versus say, I won't say affordable, but somewhere in between, that segment still has long legs to go. And we are seeing momentum there also.
So if you typically look at a cycle, which year are we in for the real estate?
So I think we at least 3 more years, unless we see an economic shock or something. We are at least 3 years away. Look, the biggest data point is the inventory to sales or the supply coming in. It's nowhere near any cyclical peaks. Nowhere.
Anything else from the listed, sort of large listed space, lots of plays which you think?
So utilities in the renewable space, we remain positive. Then we are more cautious around autos and consumer discretionary. This is on the cautious side, which also we've been sticking to and still maintaining that view. We still haven't seen any signs of changing our view on that space.
Well,
quick commerce, etc.
Quick commerce, Quick commerce, you'll have a view out there. And the newly listed one, I think, is something that you'll like quite a bit out there. So if you could tell us between the one that was listed earlier, that corrected and then bounced back, and the newly listed stock.
I won't differentiate between the two, but we like both.
Like both of them, okay.
So our analyst is bullish on that space. Again, the simple argument is the opportunity set is just too big. And we are far away from reaching anywhere near peak penetration. So it's such a long runway for growth. And still, the incumbents have an early start. You'll see more competition happening. But we have seen the playbook in multiple other subsegments also.
What does it mean for listed physical retailers?
So look, they are also trying to evolve and replicate.
There's one which is listing now, which is going to come list on Wednesday. There's of course the large, which is already listed stocks underperformed quite a bit. I mean, they'll have to evolve, you think?
They will evolve. They will have to evolve. Ultimately, everyone has to evolve in response to consumer asks. But the question is who can do it at scale as a third party and who can do it for their own business. And it'll be mix and match. So as a distribution channel or as a way to sell to customers, it will evolve. Absolutely.
You know, since we briefly spoke about China, normally when you talk about China, you talk about metals, talk about chemicals as well. So what's your view on both those two spaces? Because it clearly has an impact on the global space as well, both in metals as well as in chemicals. Any view?
So look, at a larger picture level, metals, we don't have coverage right now, so I won't be able to give a view. Chemicals, right now, it's stock specific. So it's an opportunity also as well as a threat. Like if there's a lot of supply coming in China, it's a threat from a dumping / oversupply, but also an opportunity for Indian companies in terms of the China Plus One theme. So it's not a universal theme across the sector. Each company's own strategy. So that's the way our analyst has approached it. It's whichever company is better placed in the China Plus One theme, we are bullish.
All right. And, you know, before we lead into our next conversation that we're going to have, what about the NBFCs as well as, you know, the banking space? There are reports that suggest that maybe credit growth is slowing down a little bit, and there could be some near-term pain as well in some of these NBFCs. How do you all approach that space? I think in banks, you're like the top banks, right? The largest private sector bank.
So we have been cautious on that space. Our analyst has been highlighting stress building up, including some early data points showing stress even in the CV sector, for example, beyond MFI and beyond unsecured. So, and we still don't see any signs yet from on the ground of it bottoming out. So you see early leading indicators of bottoming out. We haven't seen that. So we remain cautious broadly on that space. We're still cutting earnings in that space, except the large private banks or the SOE banks. We're still cutting earnings. So,
Tanvi, you know, one is slowdown. Again, we have, by the way, the Chola management, one of the largest NBFCs joining us on the other side. But one is growth slowdown because of the lending opportunities, etc. But the other is the RBI and what is done, right, in terms of cracking the whip. And 2024, we've seen so much action. It's an unfair question, I know, and it's not like one size fit all. But do you think that also perhaps is the reason? Because so many players are in a way out of the segment or products are out of the marketplace in that sense, and maybe that's also hurting at the margin. Do you think that'll change a little bit? Maybe a little bit of easing on the regulatory front?
That is what our base case is. So if I look at why my GDP growth slowed down so sharply to 5.4%, we need to take into account that there was a very sharp slowdown in headline credit growth, even though bulk of it was consumer credit. But even your headline credit has slowed from a peak of 18% to as low as 11%. And all that happened in a matter of 6 months. So going forward, we are actually expecting the credit growth to stabilize at around 12%. I would expect, I'm not building in more regulatory tightening in my base case when I'm looking at the growth forecast. We are assuming status quo on the regulatory front. So credit growth largely stabilizes at around 12%. That is what is feeding into my numbers. Obviously, we would prefer to have a better mix of credit rather than only focusing on consumer sector. Obviously, we would want a more broad-based recovery in credit, hopefully towards the industrial sector or the capex-oriented sector. But I think a lot of global uncertainty is in the price right now to actually expect that the credit growth could actually flow into industrials or the larger corporate in a meaningful way beyond the working capital
But the
requirement.
has to come from them,
Yes.
and which perhaps is not yet happening in a big way. Thank you both for coming down to our studios, Tanvi and Gautam. It's a pleasure. Appreciate it very much.
Thank you.
So that's the conversation for 2025 from the top UBS India team. You know, I'll take a quick commercial break here. And as promised, that Chola conversation will follow in a bit. Market, by the way, is down about 50 points. We're at 24,700. And lots of stuff moving around, which we will address as well. So new names in the mix, which was not there in the morning. And some of them we'll address. But let's just take that quick commercial break. As I said, we all have the Chola management on the other side. We talk about H2 2025 outlook with Arun Selvan of Cholamandalam Investment and Finance.
Welcome back. Well, the markets are down a little bit in the last minutes. We're down close to around 50, 60 points odd. But let's focus on the auto financial space now. The pain in the first half of the year was elevated for the sector. Is the situation improving the second half of the year? Will dispersal see a pickup in the second half? Is asset quality improving? Well, to understand all this, we are joined by the president as well as the CFO at Cholamandalam Investment, Mr. Selvan, who joins us on the show. Hi, sir. Good morning and thanks a lot for joining in. Well, tell us, what is your feedback? Second half of the year shaping up better? Are you seeing some kind of, a return in terms of growth rate? And a quick comment on asset quality as well. How much of pain is there in the system?
Yeah, we're seeing some return in, both demand as well as improvement in asset quality. I'll focus first on vehicle finance, which still is our largest part of our portfolio. In the vehicle finance, while CV's growth is still a bit muted, we are seeing some traction in heavy commercial, especially in the segments we are working with in the small road transport operator segment. And our used vehicles as well as passenger cars and MUVs are showing reasonably good growth. Tractor is picking up. While we are not seeing that much traction on the CE as well as on the mini LCV types. So it's a mixed bag, but we see the rural coming back with the tractor and some amount of PVs picking up in the rural and the light commercial and the heavy commercial vehicle. Okay. With regard to LAP, we are seeing good growth there, and with regard to affordable housing, we are seeing good growth.
Okay, all right. But tell us, is there a perceived slowdown in business momentum? Could you tell us what is hurting? Is it inflation that's hurting? Is it higher interest rates that's hurting? Because various pockets, the feedback you get is there is some kind of a slowdown. Are you experiencing that? If yes, which segment and what's the root cause?
Yes, in the as I was saying, in the CV segment, we still have not seen the full comeback which we expected to happen in the third quarter. While October was a good month, November sort of mellowed down, but we are expecting December volumes to pick up, especially with the calendar year coming to a closure and the model changes that would come into play. So we are seeing a reasonable growth. It will be certainly a growth over last year's same quarter as well as Q2 of this year, but it may not be a large growth that might have been initially thought about.
Right, Mr. Selvan, good morning. Prashant here. Sorry, just to pinpoint on commercial vehicle side, sir, could you give us some sense? What has growth been like? And what do you expect for the full year?
So the vehicle finance overall, it will clock a growth in the range of around 12 to 15% on the disbursement, and on the asset side, it should be in the range of around 15 to 20%. This is what we are seeing as we move into Q3, Q4, because these 2 quarters last year has been fairly good, but still we'll be better than last year. It may not show a significant good growth. Our used vehicle traction is good, and we are seeing passenger vehicle also growing in a reasonably good shape. But we still have to see the growth coming in the heavy commercial and the light commercial vehicles.
And those growth rates which you mentioned for Q3 and Q4, you think it's a bit lower as compared to what you imagined you would be at when you started the year?
It would be more or less similar from a vehicle finance perspective, because we had factored in that these would be a little slower growth. See, what is happening is we are able to manage the similar level of growth because we have the product diversification. So whatever we are seeing as a slowdown in the new commercial vehicles, we are able to manage it with the help of used as well as the increase in the passenger cars. Two-wheelers have sort of stabilized. It is not growing aggressively. It is sort of keeping at the same pace as what we have done in the first 2 quarters.
You're not dependent on one segment, and I think you kind of managed to sort of press the pedal on other segments when growth somewhere else slows down. So overall growth guidance remains same, 25%?
Yes. Overall, company as a whole, including VF Lab and other products put together, we still see the growth at the 25% number. I know it was being pushed to 28, but I think we should keep it at the lower end of the 25 to 28 forward statement we had discussed earlier. We should still clock 25 plus.
Okay, all right. Mr. Selvan, what about the new business? As a proportion of your total mix, how do you see that improving, and what will be the ideal contribution to your total business going ahead? If you could give us a time frame as well as contribution percentage.
So the new businesses will continue to be less than the 15% number which we had been, in the first half of this year. The mortgage businesses, which is the LAP and HL, will be the one which will see growth at the cost of a slight proportionate reduction in the vehicle finance. So you will see vehicle finance coming to around 54-55%, and then the mortgage businesses growing to around 32-33%, and the balance coming in from the new businesses. The unsecured will remain at the 8 to 9% level, and there will be growth in the SBPL and the SME segment to make up the balance 100%.
Okay, all right. Mr. Selvan, final question before we let you go. Give us a comment on the net interest margins. How do you see that shaping up? The RBI in all probability will start cutting rates from early 2025. So how do you see your NIM shape up from here on? And also quick comment in asset quality. I recall in the Q2, the provisions had spiked up, and you explained that to us as well. But could you comment on both these two, NIMs and asset quality?
The NIMs will marginally improve. We are not factoring in any rate reduction by RBI, at least for this financial year. If at all it happens in February, the impact of that would be marginal to the extent of only 1 or 2 months at best. So we are not factoring in, but we are seeing some amount of benefit because a lot of our borrowings have been benchmarked with the T-bills and money market linked instruments. So that has given us some improvement whenever there have been fluctuations in these instruments. So NIMs will improve with also the increase in the marginal yield as well as the book yield of vehicle finance, which we, as you recall, we have been talking about the mix to change as it moves into as the old book, which was dispersed during the COVID period, runs down, and the new book with a higher yield becomes a larger part of the book in vehicle finance. With regard to asset quality, yes, we did see some, increase in Q1, Q2. You will see some drop in Q3 and more in Q4. This again we had, iterated when we spoke earlier.
Mr. Selvan, we'll leave it there, sir. Thank you very much for joining us. It's a pleasure speaking to you, as always, and getting a sense of what the rest of the year perhaps is going to shape up like. Some numbers there from Mr. Selvan at Chola Finance as well. We're going to take a quick commercial break here with news that I think the market's also recovering. About 10 points or so is what the Nifty is trading, down by. And lots of new names, as I said, and we'll come to some of these stocks which are jumping around in a bit from now. Well, it's holiday season, and this is the time, of course, the best quarter for the hospitality sector, the hotel sector as well. How's demand shaping up? What are room rates like? And is it as strong like it has been for the last couple of years since COVID? We're joined by two hoteliers. We have Ashish Jankanwala, Chairman, Managing Director and CEO at Sami Hotels. Nikhil Sharma is Managing Director and Area Senior Vice President, South Asia at Radisson Hotels. Gentlemen, good morning. Great to have both of you here. Appreciate your time. Prashant, this side. Ashish, let me start with you. How is the third quarter panning out like? The big sugar rush post-COVID, has that lasted into this quarter as well? In terms of occupancies and room rates, is there any softening at all, or is it all up and up? Go on.
Hey, Prashant. So thank you for having me on the show. First of all, there's no sugar rush. COVID was bitter, and I'm glad that it's over. Whatever you're seeing in terms of performance is pretty stable. It's going to last us quite a few years. And this quarter is no different. So we've seen really strong performance continue this quarter. And it's been, as I said, something that we've seen coming in for a very long time.
So the third quarter, so far what you've seen, of course, we can't talk specific numbers, sort of big, much better than Q3 of last year?
Yeah, so we can see even for Sami, at least because we run a large part of business hotel portfolio, we had seen even Q1, Q2 grow very strong over last year, same time. And Q3 continues to maintain that trend, almost maintaining a double-digit revenue growth over last year for same-store hotels. I'm not talking about new inventory addition and all. So yeah, it remains pretty strong, actually.
All right. Hi, gentlemen. Good morning, and good to see you. And you all seem to be in the best possible sector, and the best possible time. It's the most wonderful time of the year. Ashish, give us some numbers. I recall when we chatted last, you were talking about double-digit revenue growth for FY25. Is that well and truly on? Could that be a surprise on the upside? And if you could quantify it, what could be the rough range? And I think you were suggesting that the adjusted margins were at around that 40% odd mark, and you were confident of holding out there. You reiterate that confidence?
Yeah, so I think there is no reasons to worry about maintaining a double-digit total revenue growth, and I'm talking same-store assets, and also the margins keep improving. This quarter and the next quarter, which is Q3, Q4, it's a rate.
Okay, all right. I think we have lost Ashish's audio, but I think we'll get back to it. The broad point was there's no big reason to worry. So that's good news. But in the meanwhile, let's get Nikhil as well into the conversation. Hi, Nikhil. Good to see you, Ben. Well, could you tell us what is your total portfolio like right now? How much of your portfolio comes in from Tier 2, Tier 3? And what is the kind of demand you've seen in this third quarter if you compare it with the previous ones?
Nigel, thanks for having us. Radisson Hotels in this country operates almost 130 hotels. We are in 78 cities as we speak. And I would say about 50% of our portfolio today is broadly between Tier 1, Tier 2, Tier 3. And I would differentiate leisure as a segment by itself. So really, the Saputara, Lonavala are really leisure segments in themselves, and I wouldn't categorize them in Tier 2, Tier 3, Tier 4. Of course, this is the best quarter for us as the industry, and at Radisson this year, we've seen average ADR go up by 10% in our like-for-like hotels, and for us, meetings and incentive, which is MICE, is a big contributor. And we've seen a 12% increase over last year.
That's good to hear. Sorry, Nikhil, overall, in terms of Q3 over Q3 of last year's, again, double-digit kind of growth?
Absolutely. And I know Ashish will hate me for saying this, but the best ever quarter, because Ashish has an analogy to it and he should answer that. But this is the best November that we've seen at Radisson Hotels from a revenue perspective and from a growth perspective. And December is going to be better than November. And that's historically the best ever quarter for us.
I mean,
which is true for the industry as well.
I completely agree. We have Puneet Chhatwal here. I remember speaking to him, and I remember him using that same phrase, best ever. And he's used that now for many quarters. So it is indeed been a super time. Ashish, you want to take that? Nikhil wanted to toss that to you.
So listen, my view is that the demand supply in the hotel sector will keep delivering best ever quarters for several years to come. It's like me saying I'm older this year than I was last year. Growth is imminent. I think the way we interpret that is it's just the beginning. Hotel rates in India are still not, they have a huge headroom to grow. So I think we shouldn't be surprised about the fact that every year you will see a reasonable growth. Our long-term forecast shows anywhere between high single digits to early double digits, sustainable growth rates in total revenues, So I'm not surprised. Obviously, I'm very pleased, but I'm not surprised that everybody will say this was my best ever quarter. Just as I would say, I'm older this year than I was last year.
No, that's well put. Ashish, but we had... so what is driving... Is this change in something... so I used the word sugar rush. You said there's no sugar rush. But something is different, right, compared to where we were in 2019 and what post-2020 has been like. And what people want to do... I mean, things change. I mean, consumer habits change. Quick commerce, for example, is an example, right? Very quickly, how fast consumer habits have changed. I don't know if that's a correct analogy, but do you agree? Is that, or you think this was anyway going to happen? What's your sense?
No, I think a large part of this was in any case going to happen because between 2008 to 18, the whole industry was getting built. And you saw some sort of a disturbance as any sector gets built. But 2017, 2018 onwards, most of the large cities had started stabilizing on new supply. And I can be very certain that as supply situation stabilizes, there was always enough demand for accommodation options or hotels or tourism in India. So I think it's very, very solid demand supply. We don't see supply catching up with demand in the next few years. And that's why, as I said, when demand and supply are so favorably stacked in favor of a sector, you would continue to see strong performance. There would always be disappointments about a quarter or two about the last year base, so on and so forth. But we've seen how last year people were worried about, you had G20, you had the World Cup. Everybody was worried that is that the peak and would you be able to deliver growth above that? But as I said, we have seen double-digit growth on same-store hotels in spite of kind of inheriting a very strong base last year. So I think it's solid growth. I think it's more like protein than sugar rush. It's building up your muscle. So it should last you a long time.
Ashish, easy to say you're on that side. I'm taking my family of four for Christmas out and, I think it's burning a lot of my fat, I think. So, just thinking about the kind of expenditure. But it's all for a good time and memories is what I understand is what makes it all worth it. But let's talk about business then, Ashish. Let's get a couple of numbers for you. Your debt reduction plans, well, they have been going according to plan. Could you tell us by the end of this fiscal, what should your debt number look like? And before we had the bit of that audio problem, you were going to tell us about the profitability aspect as well. Adjusted EBITDA margins, how does that go? So comment on both these two.
Yeah, so I think we have seen our stable portfolio cross 40% EBITDA margins. And I think over the next few quarters, you would see the whole business kind of getting towards that. So we're pretty happy with where the margins are. We think there is a reasonable headroom for growth as far as the margins are concerned. At a company level, we should report higher than 40% margins over the next few quarters. So that's one. I think in terms of leverage, we are very comfortable right now. As you know, we've been reducing leverage ever since we went public. We are generating free cash quarter on quarter basis. So we're doing two things, of course. One, that gets used towards reducing leverage. But even more important than that, as you know, we have invested some bit of a capital in growth projects. And most of our growth projects are very short capex to revenue cycle. So as we put capex, we expect the corresponding revenues to come over the next few quarters. And that will further help us deleverage the business because we're not really using any leverage for growth, So I think combination of free cash and then free cash being used towards both deleveraging and growth is really helping us kind of accelerate the whole deleveraging plans that we have for ourselves.
Okay, and I think the last recorded net debt number we have is 1,900 crores. As you said, you're throwing up a lot of free cash. Where is that number headed?
For now, it's around the same number because we used about 200 crores of free cash in October for acquisition in Bangalore. So while our gross debt remains the same, our net debt slightly increased because of the utilization of cash for the Bangalore acquisition. But that acquisition will start throwing up both revenues and profits over the next few quarters. So eventually, it will then adjust our total net debt to EBITDA ratios.
And also, you were talking about this Navi Mumbai real estate that you all had, which you all could potentially set up, I think a 300, 350 hotel out there. Give us an update out there. Maharashtra elections are out of the way. What's the progress on that front?
No, so I think we had a very constructive dialogue with the administration before the elections got announced. And of course, then we went into a silent period. Now that the elections are over, the new government is in place, we will kind of re-engage with MIDC. We believe that we have the right merits and the reputation to make that investment in the state. And as I said, I remain fairly excited about about Navi Mumbai as a future market. And you're right, it should potentially give us about 350 total inventory.
Okay, all right. Well, Nikhil, before we let you go, any plans of listing the company? Just look at the valuations. Ashish is smiling cheek to cheek. We have Mr. Puneet Chatwal as well. I met him a couple of weeks ago and he said, Nigel, I'll promise and I'll over-deliver. I'm so sure. Any plans in listing?
Nigel, not at the moment, but never say never. And just to your point on taking the family, you need to be more in touch with hoteliers because I can tell you we're seeing a 7 to 8% increase just in the holiday season, whether it's Kashmir or Goa. A lot of media reports that said Goa is down and out. It's not really down and out, at least not for December. It did see a dip through the year, but it's not seeing a dip anymore in this quarter.
I just had one last question to Ashish. Ashish, and you sort of you said best ever and protein, and I like that protein, not sugar rush. As they say, right, what is worth doing is worth overdoing, and we've seen that in the real estate sector. Is supply going to overwhelm, or is it really far out? I mean, at least for the next few years, you don't see that.
So I think in the large markets where the current pace of supply is upwards of 8,000-9,000 rooms, you would see that supply is not able to catch up with demand because demand is definitely growing in that 8 to 12, 13% CAGR, right? So for supply to grow at that rate, you're talking about 700 rooms to 2,000 rooms opening every single year. I'm talking about different markets. So I think large markets which have a good supply base today, I feel very, very comforted by the fact that supply will not be able to catch up with demand growth. In some of the smaller markets, things can be a little bit more volatile over the years, where let's say the current pace of inventory is 2,000 rooms or 3,000 rooms, and therefore 10% supply growth is, another 200 to 300 rooms really, So we've always said that we find greater comfort and margin of safety in larger office markets or larger hotel markets, where I'm quite confident that supply will find it really hard to catch up with demand, and definitely not in the next 3 to 5 years.
All right. A clean runway in that sense for hotel companies, and many years, at least a few years of double-digit revenue growth, top-line growth is what we should expect, as you put it. Both Ashish and Nikhil, thank you both for joining us here on CNBC TV18. It's a pleasure, and I should end this conversation by saying happy holidays. Thank you very much for being here. So that is a discussion on hospitality and hotels as we wrap up the year. Q3, the best of the year. Well, Walkhard stock is surging. It's up 10%, started higher, and I think it's only picked up steam. Vinny's here to tell us what's happening. Vinny, morning.
Good morning. So absolutely the most important drug that we talk about when you talk about Walkhard is the cancer drug, that is WCK 522222. So that is Zynic. Now this drug is an important one for Walkhard. We've seen that since the approval is coming for this drug, the stock has been buzzing. Now they've said that there's a successful use of this drug in the US for a cancer patient. So this indicates that this drug is working out well. Till date they've tried it out on around 45 patients which have benefited from this compassionate use of the drug, and that is why a positive up move that we're seeing coming in for Walkhard Hospitals, because there's a positive news there. And the new drug discovery portfolio is also focusing on meeting all these unmet needs which are there for antibacterial drugs. So keeping an eye on this one because it's an important one for Walkhard, and any positive news on this front works well for Walkhard.
All right, no, absolutely. That's a big one for them. 1524 on the stock. We'll take a quick commercial break here. Mitesh joins us on the other side. Coming up. Welcome back. 30 points lower, 24,740 is where we are at this point. Mitesh is back with us with what he'd want you to do. Mitesh, good morning again. So it's a quiet day, at least for frontline indices. What would you want viewers to do?
Yeah. So Prashant, it's a quiet day, but some stock-specific action is happening definitely for sure, and ITS still remains a good back. So, from there, I would recommend buying into Naukri. Buy here with a stop at about 87.30 and a target of 9,000 can be looked at. And the other one is real estate, and I have a buy on Lodha Developers, which is making a fresh swing high. So keep a stop below 14.35. Look for targets of 15.20, 15.30.
Got it. You know, what we'll do is we'll take a quick commercial break here. Mitesh, thank you very much for that. Our special Indianomics segment on the other side, Lata gets speaking with Lohit Bhatia of Quest Corp, Mr. Balakrishnan of Center for Development Studies, and Amit Basole of Azim Premji University to discuss why salaries in India are not rising or not rising at a fast enough pace. That's a conversation. Interesting one. Stay tuned. Coming up.